Hey everyone, Canoo provided investors a second quarter update, which I will review in this video here. I will also update my recommendation of Canoo stock. Coming into this report, I had Canoo stock rated as a hold, closer to a sell, and you're going to want to tune in to see if I'm going to change that recommendation in this video here. So let's get right into it. So there was a few highlights in the quarter from the company. Now, because it's not really ramped up in terms of generating revenue and earnings per share, those aren't the items that I find most informative when looking at a stock like Canoo. So I've highlighted the items that I think is most informative to investors. So let's get right into it. So they've settled an SEC matter that was good news, and they generated the first revenues from vehicle deliveries and government contract in the second quarter. Remember, they delivered those cars for NASA. I believe it was just 3 vehicles though. So very slow going for Canoo in terms of ramping up and getting deliveries going. But the good news is they closed on a Fortune 100 customer agreement to purchase vehicles for the national fleet. I would have liked to have seen more details on this agreement. Perhaps it will come out in the earnings call, which I will also be going through as well. The company completed all compliance activities for federal vehicle motor safety standard certification and board certification for the LDV. These are processes that you have to go through, and it was good news that there was no hiccups in this process, no further delays. Interestingly, they will be employing a combination of in-house, hybrid, and outsourced strategy in manufacturing to support their 20,000 unit per year run rate. That's a bit peculiar since they've invested so much already in the company that they're still going to need to outsource some of that manufacturing to support that 20,000 per year run rate that they were talking about. I think investors were hoping that when they were talking about forecasting the 20,000 per year unit run rate, they were talking about in-house run rate, not the ability to outsource, right? The ability to outsource is available to most companies. And so that was a bit disappointing to investors, including myself. In a piece of good news, the company contracted for up to 113 million of state of Oklahoma incentives to create 1,360 manufacturing jobs in Oklahoma. That's one of the keys I'm looking for in a lot of these EV companies and EV charging companies because there is so much fiscal and state stimulus available. I want to see them start to secure those deals, right? Because that's a lot of free money that's sloshing around that companies like Canoo can go out and capture. And that is a huge benefit because capital, remember these companies that are investing so much in research and development and preparing to ramp up sales, cash is a big concern. So securing some of these contracts and getting that cash is a big deal, a big help, and a milestone that helps these companies move forward. So their facilities are nearing substantial completion to achieve the 20,000 unit run rate for their battery module line in Pryor and robotics assembly line in Oklahoma City, and they closed on that deal. And revenue and income generation phases undergoing with their contract with the Department of Defense, and they delivered the vehicles to NASA. So solid progress there, albeit slow progress, but solid forward progress. And here's the big key for the company is their cash. So as of June 30th, they had only 5 million of cash, but after giving effect, after accounting for the issuance and sale of the second and third Yorkville convertible bonds of 53.2 million and proceeds from the August pipe of 3 million, their cash balance would have been 61.2 million on June 30th. So they did go out and raise more capital. And this is why I said these milestones, these incentive deals that they secure will help Canoo secure more outside financing. Because if you're a lender and you notice that Canoo has secured let's say 100 million in grants from governments in various, federal and state departments, you're more comfortable lending the company money because they've got these incentives coming. They've got these incentives coming. Usually these incentives are tied to something, like they don't just get money, they have to build 100 cars, or they have to build charging stations, or they have to, something associated with the grant. And so lenders are then willing to grant the company money or lend the company money so that they can go out and produce the thing that's going to get them the incentive, because they feel comfortable that they're going to get their money back. And so these deals are more important than for other companies because they are so strapped for cash right now. And so finally, I'll end with this. Their net cash used in operations totaled 129 million for the 6 months ended June. That's getting better as they're nearing production, compared to 237 million for the 6 months ended June 30th last year. So it looks like the big heavy lifting for investment has been completed already, and now it's time for the company to start making deliveries, producing these cars, and starting to capture some sales revenue, which will help ease the burden on its cash burn going forward. So to update my recommendation, I'm keeping Canoo stock where it is, hold and closer to a sell. It's still too early, still too speculative, still too risky for me to recommend this stock as a buy. I want to see more progress before I can upgrade this recommendation. Again, my personal preference, I tend to wait for these companies to show more progress, and I'm okay with missing out on some of those early gains, as well as missing out on some of the earlier riskiest part of the investment opportunity. All right, but that's all I've got for this video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.